Hey, so another question I've been asked is, what's the difference between a trade and an order on Etoro? And it's really quite simple. There's a few things which are a bit technical, but really it's a simple thing. So whenever you buy something on Etoro, you're normally buying it, you see the price listed on the page. So if we go to Bitcoin, let's go to Bitcoin because that's been doing well. So here we see the normal price. That's how much we normally would buy Bitcoin for. Here's the trade button, used to that. When we go to the trade button, say we want to buy some Bitcoin. So obviously if you're buying, it means you're betting the price is going to go up. And if you want to sell, it means you're betting the price will go down. You want to make money that way. So we see this thing. Here's the price. Now we see that the buy price and the sell price are different. That's the spread fee. So when I press those buttons, you see this number changing. Now, but normally when we open a trade, we expect to open the trade instantly. Okay, I want to buy it right now. I don't want to wait. I don't care how the price is going to change. I do, but only in future. I want to buy it now, and that's my kind of bet is placed. Now over here we see the button which says trade. If we click on that button, we can see that there's another option which is order. And this is, some people have asked, what's this about? Really basically, all it is that an order is that when you select order, you can set a price that you want to buy it at, or if you're selling that you want to sell it at. It doesn't have to be the price it's at now, okay? So you're putting an order in. Let's say I want to buy it. I think the Bitcoin is going to go down below 8,000, let's say. So I want to set an order at 8,900, okay? So I can do it here. I can specify any level, any price that I actually want to buy it at, which isn't the one where it is currently. That's basically all an order does. Now, we're kind of used to using orders. Like when you set up a trade and you start a new trade, you often set a stop loss. So a stop loss is actually an order. It's a stop loss order. What you're saying is that if it ever gets to this predefined level, cancel it, sell, close the position, sell my trade, I want to get out of it. Same with the take profit. If I go into any of my trades here in the portfolio, it's my virtual portfolio, here's my take profit. So the take profit is saying, if it ever gets to 396.29, close the trade and I want to get out of it. That's a type of order. Okay, so a take profit is an order, a stop loss is an order, but with all trades, it automatically asks you if you want to set those up, because one's for security and one's to take your profits. So even though take profit and stop loss are actually orders, they're very different from what we're talking about when we say what's the difference between trade versus an order. I just kind of wanted to give the fullest information about what an order is, and so that people can understand, we can understand that we use them anyway. It's not like some mysterious thing. Now take profit and stop loss. Here I am on Zendesk. If I press trade, here's the take profit and here's the stop loss. And here's the order. Here's really what we're talking about, at market and order. So the take profit and stop loss, they're not called orders on Etoro, okay? So it's a bit confusing if I say that, if I even call them orders, because people might get confused. When we talk about orders, we're talking about these things here, where we want to buy into a stock or an asset at a particular price. These ones, the take profit and stop loss, they both deal with when we want to exit a trade at a particular price, okay? So those are orders to exit a trade, but we don't call them orders, so you won't find them up here. You can't set your stop loss from the order bit. Whenever you start a trade, you'll see your take profit is here and your stop loss is there. Anytime if we're in a trade and it's already active, we can go to our portfolio and we can go to any trade, and here's the stop loss and take profit, and we can just click on it and we can edit that even whilst the trade is active, okay? So those orders, they're different, okay? They're to exit a trade, and Etoro puts them there so that we have some security, so that we have a time where we can either take the profit because we've made as much profit as we want, or we think we can make and we want to get out of the trade, we want to close the trade, or stop loss because we've lost as much money as we want to lose, we've predetermined that, and it gets us out of the trade. They're both to get out. The orders we're really talking about are actually the ones when we want to get into a trade. So it's these ones here. It's that. So that one, if you're on a stock, you can find it there. And if you're on a anything else other than a stock, you can find it here. Okay. I don't know why they've done the difference, made it different on stocks and other assets, but they have. With the rest of them, when you're setting a new trade, so we'll go back to Bitcoin. That's basically all it's doing. Is it's saying, I don't want to buy it at the current market value. This, what we're normally doing here when we buy or sell, is actually known as an at market order or a market order. But we don't have that. We just have a buy button or open trade button. As standard, the default is actually a market order. This is actually called a limit order when we set it as an order. But here it's just called order. To keep it simple, when you select order, you can set any price you want, and there we are. And you can set the order at 8,000, boom, boom, boom. So there we are, 8,000, and I set the order, okay? Now that is gonna stay open. So if I go here, I'm back in my portfolio, you see this button shows my history, the history of my trades. This is my portfolio. This one will show any orders. So there it is, there's my order. That's how much I invested. I'm gonna execute it at 8,000, and it's currently here, all right? Now, there are different types of orders you can set in other sites. You can set them, you know, it has to be filled by the end of the day or get rid of it. It has to be filled within so many minutes or get rid of it. This one is actually, in other places, it's known as good till executed. I can't remember, whatever. Basically, the orders we have here will stay open until they're fulfilled. And they might not be fulfilled. It might not go down to 8,000. Bitcoin might go higher and higher and higher, never get to 8,000, in which case that order's never going to be filled. You're never going to buy that amount of Bitcoin. So this order will be executed if it's there. If it's not, doesn't get there, the price of Bitcoin, then this order will just stay open. Whenever you want, you can just go here and you can cancel the order. Big thing comes up, cancel order, boom. Pending close, and it's closed. So that's how orders kind of work. Now, why do people use them? All right, so when you're trading, you have two basic big schools of analysis. So there's fundamental analysis, where you're looking at the fundamentals of a company. Is Apple going to do better? Is it going to make money? Have they got a new CEO? How's the stock price? Have they got a lot of debt? Lots of things, earnings reports. These are the fundamentals. Have they got new products? Do I think they're going to do well in future or badly? These are going to affect the price fundamentally, all right? I've heard good investors I've listened to have said that 80% of your reasoning should be fundamental, really, about the fundamentals of a company, if you want to really invest properly. The other part is called technical analysis. Now, technical analysis is where you're looking at the charts. So if we go to anything, we go back to Bitcoin, we go here, and we can go to the charts, and we can see a bit about what it's been doing over time. It's unbelievable what it's been doing over time. Now, when you decide you want to buy something, you want to sell something, people say you should do that using fundamental analysis. But then look, if you look at Bitcoin, it goes up and down and up and down and up, and there's all this sort of variation. Okay, now, the study of that variation and how the chart actually moves is called technical analysis. So you're studying this, which is not about the fundamentals of a company. It's about how the price is moving on the actual exchanges. So one thing they do is people want to find what's called the best, entry points and exit points. So once they've worked out that they actually want to make the trade, they want to invest in a company, they start looking at, all right, I want to make this buy, but what's the best time to enter? They know that it goes up and down and up and down. So do I want to enter here and it's about to go down, or do I want to wait till it's here and go up? The study of how to find the best entry and exit points, as well as looking at longer term movements, is called technical analysis. So you have to study that. Technical analysis, you can study charts, you can study the sort of the trading instruments. There's lots of different studies and stochastics and volume charts. You can put loads of things over here, different things to help you with your technical analysis, and you'll have to study them separately. It takes time. But once you understand technical analysis, say for instance resistance and support, I made a short video about what resistance and support is. Support would be places where it's bounced off it in the past and it looks like it will go up. If it does it enough times, it forms support, so you can be pretty sure in future when it hits that, the market's going to say, hold on, I don't think it's going to go below here, and go up again. Resistance is the one above. It'll stop it going up. Support below, resistance above. Once you know things like that, even basic things like that, you could set an order for where you see the support. Do you see what I mean? So I think when it gets to there, I think it's going to go up because there's a support level. I'll set an order at that price. Or if there's a resistance line, you say, okay, I think it's going to hit that resistance and it's going to go back down. So maybe I'll set an order if it breaks out. If it goes just above that resistance, then I think it's going to go to the moon. So I'm going to set an order there. These are some of the things people can use orders for. Okay, so you can use it in conjunction with technical analysis to find the best possible entry points and exit points out of a trade which you already believe in. In simple terms, that's the difference between a trade and an order on Etoro.